A few years ago, I used to be in car insurance sales. And in this video, my hope is to show you how buying car insurance can basically be as simple as ordering a pizza on a Friday night. It's crazy to think that 1 out of every 8 drivers in the country doesn't have car insurance. And it's even crazier to think that a larger number than that doesn't really know whether or not their car insurance is actually protecting them or not. If this is the first time that you're buying car insurance, or whether you've had insurance for a while, stay through to the very end because I'll be including tips that could help you save money and some general knowledge so that you can better understand how insurance works and what goes into it so that you can take this information and go to a licensed professional in your state that better understands your situation to figure out a plan. Do not take this in any way as financial advice. This is only for entertainment purposes only. The purpose of car insurance or insurance in general is to bring a person back to a situation that they were in before an incident or an accident occurred. With that in mind, there were always 2 common phrases that I heard when somebody came to ask me for insurance, and that was, just give me what the law requires and full coverage. And both of these are bad because what the law requires is typically not enough to protect you, and full coverage is basically a myth. And I say that because, going back to our pizza analogy, if I gave you breadsticks and some dipping sauce, since you have bread and sauce, we can consider that a pizza. But on the flip side, if you had a pizza with gold flakes, 5 different cheeses, pepperoni, sausage, and everything else in it, you can also call that full coverage. So since it doesn't really have a specific definition, I don't think full coverage should be a term, and it's kind of a sales tactic that people use to oversimplify a complicated topic. Instead, it's best to understand the coverages that go into your policies. So like picking a pizza, you can pick specific toppings that will lead you to a specific desired result. Insurance acts as a shield to protect you against somebody else coming after your assets. So with that in mind, it's probably best to take a look at your assets, make an inventory of what you have going on in your life so that you can make coverages that are appropriately fitting to your current situation. Insurance prices are usually based on a few different things, such as the driver's age and potential risk, so their driving record, the car that they're driving and how valuable it is, the area that they're living in, and a few other things. So first, I would probably take an inventory of everything that you have. So if you needed to insure cars, if you have a 2017 fill in the blank, you would need the VIN number from that car, the vehicle identification number, which you can find on the dashboard, and then also on the door of the driver's side. You open it up, it's 17 characters long. Take notes of that along with your odometer reading, and then you can take an inventory of all the drivers that are in your household that will be on the insurance plans. So if you have children, spouse, and whoever else, you're going to want to have their full name, date of birth, and their driver's license number so that the insurance company can go pull up all these reports. Make sure to be transparent about your driving history. So include any tickets that you had or any accidents that you had, because they will come up in their reports. And if you gave them information that isn't necessarily correct, it could affect the price. And after the fact, your price could go up after it goes through the validation process of the insurance company. Next is understanding the types of coverages that are available to you. First being liability coverage. If you are in an accident and you cause damage to somebody else, these 2 coverages will step in and pay for their damages. Bodily injury will kick in if the person is injured, and if their car is damaged, property damages will kick in and help pay for the expenses of their car. Now you need to get with a licensed professional to better understand how much coverage you need at this point, because typically what the law requires is not enough and will not cover you in the event that somebody has damages against them. But in the event that they sue you, you want to make sure that they can't take your assets as well. As we discussed before, a lot of people don't have insurance. And so underinsured or uninsured motorist coverage can basically step in the event that somebody hits you or causes damage to you and they don't have the insurance to back you up. So many times you'll probably hear about deductibles, and these are things that would kick in the event that you have damage to your own property. And that's separated into 2 different types of deductibles and 2 different coverages. The first being comprehensive coverage. Now, comprehensive coverage is basically a coverage where if you have a rock that falls onto the roof of your car, or a tree branch falls onto the roof of your car, or there's a fire and your car catches fire, or theft or vandalism, that's when comprehensive kicks in, and you would pay a predetermined deductible in this case. So let's say, for example, if your deductible is $1,000, you would be responsible for covering the first $1,000 of the damages, and then the insurance company would kick in and cover the rest. But of course, based on the terms of your policy and how you work that out. Second, the collision coverage would kick in the event that you have an accident. If you cause the accident and your collision deductible is $1,000, then you would be responsible for the first $1,000, and then the insurance company would kick in and cover the rest for the damages of your own car. Those three coverages that we just covered are kind of the primary ones that we discuss across all 50 states. And then you can move into things like medical payments coverage, and those would be applicable to anybody in your car in the event that you had an accident. It doesn't matter who's at fault for the accident, and the insurance company will pay a specific predetermined amount, and that's for any kind of medical payments, so ambulance rides, injuries, and things like that. In addition to that, there is the personal injury protection, and that's basically in some states as well, and that is a little bit more general than medical payments. It can also cover things like childcare or loss of income and things of that nature, and I'll include a link down in the description that will be a little bit more of a comprehensive overview. But of course, you should be having these conversations with your insurance professional. And finally, there's a couple more coverages that are optional but maybe nice to have if you want to pay the extra money, and that's things like rental car coverage, which typically covers a fixed amount per day or a fixed percentage per day for a certain number of days in the event that you have an accident and you need to make a claim against your policy and your car goes to the body shop. This is where you can get a rental car for that time. In addition to that, there is also roadside assistance coverages that are on some policies, and they're usually fairly inexpensive and can help you in a pinch unless you already have roadside assistance somewhere else or you feel like you don't need it altogether. But sometimes the extra little expense is worth it. Now that you have a general understanding of how some of the coverages work, it's important to go and look for the best insurance companies that fit your customer service requirements, the pricing that you're looking for, and the overall integrity of the company that you want to work with. I would say it's best to look at consumer reports online and keep an eye out for some of the major names because they're typically going to have some of the best options for you. However, it's also possible that you can work with a brokerage. I typically don't like to work with a brokerage because their purpose is basically to find you the best price, but they take a fee on top of that. And if you work with a company who's also the person insuring you, then you won't necessarily have to pay all these additional fees to take the insurance on. After you've identified 3 companies that you can speak with, it's best to work with them to figure out which coverages you want to have, and then send that coverage requirement to all 3 companies so that they know what you're looking for, and then they can go and give you pricing based on the coverages that you're looking for, based on the drivers that you want to have on the policy, and all the cars that you're going to have included. Once the companies come back to you with their pricing, then there's a few different things that you can ask for to get a better discount. And those are things like low mileage discounts. If you're not planning to drive more than a certain amount of miles every year, I'd bring that up with them because a lot of times, since you're considered less of a risk because you're not driving as much, they'll give you a little bit of a break on the monthly payments. In addition to that, you can bundle multiple cars on the same policy, or maybe take out a renter's policy for the apartment that you're living in, or combine your homeowner's insurance too, because that'll also give you a break on the monthly payments sometimes. And then you can look at things like a good student discount if you're a student. Some companies have a good driver test, so you just take a written test for them. It's usually like 10 questions, and then they can give you a little bit of a discount on the policy as well. One of the ways where you could potentially save a little bit more money is evaluating your deductibles and the amount that your deductibles are set at for the insurance policy. Typically, the higher the deductible that you have, the lower your monthly payments will be. If you can afford a higher deductible payment in the event of an incident, then it's a little bit of a break on your insurance monthly payments, and that might help you out a little bit. On that same note, comprehensive coverages are typically a little bit cheaper to insure, so if those deductibles are lower, it probably won't make it too big of a difference for you. But on the flip side, the collision deductibles are typically the more expensive ones to insure, and you can see that in the breakdown of your policy. And then you can also take a look at maybe paying all the 6 months or the entire year of the policy up front, because occasionally they'll give you a discount because you're paying everything up front. Or you can also look into auto charge forms, because the auto charge options will often give you a little bit of a break as well. For young drivers, if you're under the age of 25, it will be a little bit more difficult to find good deals on insurance. So if you can be on a family plan, it might help you out in getting your prices a little bit lower. So I would definitely consider that if you have that option. One of the most important parts to keeping your prices down are to make sure that you have a clean record. And that includes things like tickets. So speeding tickets, or driving with phone in hand, or car accidents, or driving while under the influence. Any DUIs or anything like that could also potentially cause the insurance company to drop you, and you'll have to then go to a substandard insurance company, which will charge you crazy amounts of money to be insured. All in all, a few things that I would watch out for is somebody who's just basically trying to rush you through the process, because a lot of times they're more concerned about making their commission above anything else. And then make sure you get everything that they agree to in writing. Verbal agreements are only as good as the written documents that they hand you. Keep an eye out for the exclusions that are on the policy and a lot of the fine print. And then once you agree to your insurance, go ahead, print it out, and put that in your glove box so that if you're ever pulled over, you have proof of insurance ready to go. I know a lot of people recommend shopping around every single year, and I think it's important to assess the situation that you're in every single year to figure out what your liabilities are, what your assets look like, and to figure out if you can apply for any more discounts. And then it might be a good idea just to shop around to see what things look like, but not necessarily jump at the first opportunity, because you may not find that the grass is greener on the other side. I hope that you were able to take some value away from this information, and I hope that it gave you a little bit of insight into how coverages work, some things that you can do to save money, and then the due diligence that you need to do on your own, because I am not a financial advisor and this is not financial advice. But check in weekly, because I'm creating videos that will hopefully help save money and bring light to topics that are not usually talked about in school and in college. And so I just hope that this helps you out in some way. Thank you for watching. Have a great day and take care.